Hello, everybody. Bob Adams here. Welcome. This is our follow-up continuing education for those who have attended the Breitling events in Las Vegas and Los Angeles. Tony and I there's just so much information to share, and we both feel the same way, that part of our purpose for gathering with all you folks and to have these conversations is to share with you a continuing way of being able to accomplish what it is that you're after in retirement. Now, I realize the majority of everybody come to hear about the dinar, and that's, that's ordinary because that's what we talk about quite a bit. And Tony obviously brings a lot of information in that particular realm. We've introduced you to another investment that's really quite awesome. But also we have continuing education this evening being brought to you by Megan Galane from MountainWestIRA. Now, I've asked her to be here this evening. For those who were at the Las Vegas event, you had a chance to meet her. She, in my opinion, all of the work that we do means nothing having this information in front of you. You have got to understand this stuff that we're going to present today so you can really be, a sophisticated, educated investor. You need to understand that the biggest hole in your financial ship is those cotton-picking taxes. So we're going to talk about that quite a bit this evening. There's a lot of updates I want to share with you first. First of all, the picture you're seeing there on your TV or on your computer at this point in time, this is the lighthouse here in Bandon, Oregon, where I live. And yes, I took that picture. I just really enjoy my photography. It's a lot of fun for me to do. And we're going to get started right here. So welcome to today. So our topics for discussion, I'm going to go down those. I know that Tony's got some information he's going to share. I'm going to let him talk. I am going to control him, though, because, he talks a lot. Tony, okay? And after that, I have some updates for tax strategies for the IQD. We have some changes, some real big changes that have happened with SimTrade Pro options that are really good stuff, all right? And we're going to talk a lot about taxable versus tax-free planning. Now, some of you may say, oh, my God, that sounds boring. No, it's really going to be awesome. I've got a really neat spreadsheet I've worked a lot on. A lot of contribution came from Megan and getting that put together. I want you to see it because I want the reality of achieving a retirement to become more of a reality. And you'll be able to download this and play with it until the cows come home, but it's really going to be neat. Then we're going to have a great presentation made from Megan. Now, she has sent me a PowerPoint. The system that we have currently, I don't know how to shift it over so that she can take it over and do the presentation. So I have her presentation. I'll do the best I can to make it as fluid and as smooth for her as she does her talking. But the information she has is extremely valid, particularly when we come to talking about the options to be able to receive net gains tax-free. And there are several, okay? So we'll talk about all those in a little while as well. And then finalize, we'll end up with a question and answer opportunity for everybody. So you can ask Tony, ask me, ask Megan. You'll have a chance to be able to extend your understanding. One more time, the purpose of this event. I'm actually planning on doing this 2 weeks after every event from now on. We just don't have enough time in the time that we're together to share everything that's really most appropriate and most important for your tax planning, your retirement planning, your understanding about the dinar and about finances and all that kind of stuff. So this is something that's going to become normal. Also, Tony and I have got our scheduling we're putting together for our travels. For most of you may be aware, we have an event coming up in Atlanta shortly. But this particular presentation is tailored to those who have been to our LA and LV event. So based on that, the next thing I'm going to do is I'm going to get out of the way because I know Tony's got some information to share. And so you are up, my friend, *6 to get into the program.
Did everybody hear me? Can you hear me, Bob?
Yep, you're good.
No, excellent. Look, I mean, I don't have too much news to share. I'm actually still waiting for some more information. But what I wanted to do is one of the things that I actually privileged information, okay? So this isn't something that you're going to read out of an article or anything like that. But we have these guys that are actually doing business for the military, and these actually guys did business in Kuwait after we liberated Kuwait, and we also did business with Iraq, and I did a little bit of this. That's actually how I found out about the stock market. and a rock. But all these guys are talking about the banks and what they're doing and how they're doing it. You guys, it's all set up for the value of the currency going up, because what it is that they're starting to see the businesses, not the CBI and all. They know exactly what they're doing. They're not in a guessing game, but they're starting to see that, you know, it's people can talk one way, but actions direct everybody on exactly what's going on. You know, if you see people, you know, the example I always use. You have somebody that has a bicycle factory, or they claim they have a bicycle factory, but you know, you see skateboards keep coming out the doors. That's what's going on in Iraq. And so these guys are going to revalue their currency, and these people who usually don't talk like the dinar crowd, nobody talks like us. Guess what they're doing? They're talking like us. And these guys, you know, they're going nuts. But anyways, that's about it. That's about it. But on what Bob is going to talk about today, you know, it's interesting because you know, these investment platforms, you know, you guys, the dinar is speculation, all right? You know, the investments outside of that, I don't speculate. I get investments that give a return. I don't screw around. You know, we always talk about, you guys are at the event, perpetuity. That's our goal. That's what we're looking for. Survival, and then insurance and perpetuity. And so here it is. But the thing about it is, what's different is actually Bob has a different product, because we're cranking it per month. And so it actually opened up a lot of doors to get in a lot cheaper and to be able to, well, I'll let Bob talk about it. So you guys, look, I'm going to be here. I'm going to, any questions that you have, I'll be here at the end, so stick around. But listen what Bob has to say, because this stuff is super, super good, and it blows everything that we talked about out of the water before. So, Bob?
Okay, Tony, thank you very much. All right, so back to, yeah, *6, there you go. I just have to remind him once in a while, guys. All righty. So, IQD and tax updates. First of all, I want to know that I have talked to, I don't know how many people. I have a whole bunch of people who have sent me their forms to go over and share with them. I've called, I left messages, we haven't connected, whatever it is. We'll talk about that in a minute. But I have found some general information I need for people to be aware of. So I'm going to focus on that. I do have some special information in regards to Warka, which we'll talk about in a moment. Okay. Now, for those of you who are planning on using a Roth option for dinar, be aware that now the availability is pretty good. All right, I just got through checking. I know that the price right now is running around $1,200 for 25K notes for 1 million of them. You know, the price flexibility right now, it's a little more expensive to get, but I highly recommend that if you're going to do that, now's the time to do it. Now, Tony's got through sharing what I think is important information, which is we're seeing more and more of not skateboards coming out the doors. Okay, it's just getting more relevant all the time that this thing is going to come to fruition. If you're going to take advantage of the Roth, please do. Please do. All right. Now remember, the IQD must be purchased by the Roth hosting service. Now we currently are using MountainWestIRA for our work that we're doing in the way of a Roth with dinar. Alrighty, so you need to set up the accounts, and I know that Megan's going to go over that later on this evening. You need to set up the accounts. You need to have them purchase your dinar on your behalf. The dinar then goes to a certified vaulting service, and it sits there waiting for the glorious day when they're sending bicycles out instead of these cotton-picking skateboards. All right, but you have to remember that IQD must be purchased by the Roth hosting service. Okay, my invitation to you is if you don't have much now, if you don't have much at all, don't buy more to put in your hand. Get the Roth. Now, acknowledge, the Roth takes 5 years. Acknowledge, I may be too old. Okay, I hear that. I understand that. But if you're ever going to create a legacy, if you want to be able to do something that's going to have true significance, this is the way you want to do it. You want to do the Roth. Now, for some people that are 30 years old, they'll say, well, man, I got to wait another almost 30 years before I can pull it out. That's true. That's why I'm telling you, don't put all of it in there. Not by any means. Okay? Most of the people I'm talking to, I'm saying put 2 to 5. Whatever you can afford to do. But don't I have people who have got hundreds of millions of dinars sitting in a Roth. Okay? I'm not suggesting that you do that. I'm suggesting the exact opposite. I'm sharing, put some in. 2 to 5 is enough. You don't need to overwhelm yourself with it. But what if it's going to come to fruition that $1 I'm going to have all, yeah, that's true. That's true. But seriously, if you have $2 to $5 million that's tax-free, you know, you're pretty much set for life. And you're going to need that other IQD to do some of the other stuff you want to accomplish. So don't put it all into the Roth. Only put enough in based upon the information that we currently have. Potentially it's going to go to $1. We don't know when, how quick it's going to happen. But if it did, and it does, and it will, then you're going to want that to be available. Yes, it's a 5-year waiting time. Yes, you got to be 59 and a half to pull it out. I don't care. The cost for maintaining that Roth with that dinar is so minimal compared to what the eventual blessings are going to come out of it. You got to do it. You just simply have to do it. Okay, Warka. This is interesting. Warka is, as you know, was well pushed a long time ago, and many people decided to put dinar in a bank account with Warka. Warka, as Tony explained previously, is caught in the internal tribal mess that goes on in that region, and so people were unable to make communication with them for quite a while. Okay, I got to mute. Everybody got to mute. Okay, thank you. Okay, for those having accounts with Warka, you're in a special situation because it's kind of neat. Okay, now the increase in the dinar must be reported to the IRS. If you have not heard, you're in a different spot. For those of you who have managed to link back up and discover it, lo and behold, I had 8 million, now I have 16 million dinar. You have a taxable gain in that event. You have a taxable gain in that event, and you need to be aware of it. All right? So when you go to report that particular interest, all right, you're going to have to report it as dollars on your tax return. Also, you need to remember that anytime you have more than $10,000 in Warka, you have to report it to the IRS. Let's call it FBAR, okay? And you can go to your accountant and have them help do that. If you don't do it, because you do know about it, you have opened the door to penalties that can wipe out everything. Just don't do it, okay? Go report it. Now, if you don't know, if you've been unable to make contact with them and you don't know what's there, okay, just keep attempting to make the contact. The IRS cannot do anything to you if you've done the part to try to make contact and you haven't been able to get it. You just report it when you do get it, all right? And then also, because of the increase in gains, it's measured by the number, the amount of dinar. This is kind of tricky, guys. When the revaluation occurs, it'll have no effect on you until you exchange it here. So what that means, if you have 8 million dinar sitting in the Warka bank, and suddenly it becomes $8 million in value, it doesn't make any difference. It's still only 8 million dinar. That's it. Until you exchange it. Now, they've been offering bank cards from Warka as one way to be able to extract your funds. Remember that if you do use a bank card for doing that, every time you pull money out, it's a taxable event. So, before you jump and do anything, pulling money out of that Warka account, get a hold of your professional prior to doing it. You need to make sure that the way you're reporting it is correct. Now, this information, guys, this is fresh. This is new. Alrighty? It's just no different than if you had the dinar sitting in your vault here at the house or whatever. Okay? Until you exchange it, that's when it has value. As long as it's sitting over there in Warka and you have not exchanged it, it's the same thing. You've got it sitting in a vault somewhere. However, because Warka is paying interest on that account, the interest is what needs to be paid on. Now, how's that going to work if it revalues and suddenly you have an interest gain? That's where it gets interesting, guys, and you're going to have to talk to your tax preparer or tax professional prior to that time. Now, at this point, we don't have that problem, and I still have feelers out trying to get the answer for the answer to that particular problem, but I haven't gotten it yet. I do know that I have this so far. All right? So that's the information that we have on Warka. You just need to be aware. Yes, you need to get a hold of them. Yes, you need to get the link. Yes, if you have an increase that's from your original amount, you do need to pay taxes on it. Calculated in dollars. If you have $8,000 worth of dinar that was there and it's doubled, then you have to pay $8,000 worth of interest gain on your tax return, not what the value of the dinar is when it revalues. Okay? All right, also, for your personalized tax plan, I want to tell you guys, sometimes I have such difficulty getting with people, and it's either because I'm busy or I call and leave a message, they haven't called back, whatever it is. Okay, for those of you who have not had your personalized tax plan with me yet, call me. There's my number. Now, I told you a little bit ago this was going to be recorded. You'll have access to that number again, 541-329-2130. If we have not had a conversation yet about your particular circumstances, call me. Now, regrettably, I've been really busy, extremely busy, okay? But I'm doing the best I can to stay in contact with everybody. What I'm finding is when I have the conversation with you about your tax planning, there's a lot of things that are common with about 90% of the people. Once in a while, I have something that is a rare fluke that gives me an opportunity to stretch my strategy work, and it also gives me the opportunity to learn something that I can share with other people. So it's important that we have this conversation. Besides that, I enjoy them. So please feel free to give me a call. Okay, and if you have sent me your financial review and we have not talked, call me. Okay, and if you haven't filled one out yet, you can get one at the website. The website is www.simtradepro.com, Dinar-Related Podcast. That's where we have this. Now, for those of you who are unaware of what our website looks like in regards to that, I'm going to show it to you just real quickly. Alrighty, hang on. This is what the website looks like. And right here it says IQD Related. You'll find a lot of information there that's going to be of value to you. If you have not done your financial review form, it's right there. You can download it, fill it out, get it back to me, and we'll have a conversation about your own personalized tax plan for the dinar. Okay? All right. Now, for those of you who have been to the event, you know that we have our investment platforms. Those who attended the one in Las Vegas, you didn't even get introduced to the one I'm going to show you here in just a minute. Those who attended the Los Angeles ones, you did get introduced to the one we called Test because we didn't have a name for it, and now it's called Flash Forward. It is a phenomenal, phenomenal one. But we also, in conjunction with our conversations that we're having with our members, with Tony, with Jason Gospodarek, who is our primary Forex connection, with Megan, we've come up with some ideas that I think are going to be most valuable. The concept of SimTrade Pro has always been the same. We want everybody to be able to achieve a livable, comfortable retirement that would not be ordinarily available. And so to do that, we've gone out and managed to create these investment clubs, which gives us our way to get access to these higher investment opportunities. And that is our goal. That goal has not changed. We've been focusing on making sure that we get the best options we possibly can. So there have been many significant changes in the past few weeks. I mean, I kid you not, this is so fresh. The first group that I got to hear about that was last night. So that's how new it is. So our focus has been, it continues to be, on assisting our members to attain a decent retirement as quickly as possible. So here are the major changes. Number one, for those of you who are familiar with our enrollment on our invitation to participate in Tier 3. Tier 3 was our cash account. Okay? It was created for quarterly options. So people could get in for as little as $1,000, and every quarter you have the option to do something different. Now, in our quarterly meetings, we've been showing them the gains and the options we've had with 2 different strategies, all that kind of stuff. We've also been pushing very carefully for them to realize that magnifying your increase as cash hurts you more than it does being in a Roth. I'm going to show you that in a detail tonight that'll be very clear and very simple for you to understand. So at this point in time, what I'm announcing to you is that Tier 3, which you've been running now for several months, will not be accepting any more people after the end of this month. Now don't panic, all right? It's just that we're changing the way things are being done. And the same options are going to be available in Tier 1, but there's going to be some restrictions. I'm going to show those to you in just a moment. Our other long-term investments consist of Tier 1 and Tier 2. Tier 1 has always been just straight cash. Tier 2 has been retirement accounts. So from now on, when you go to participate with what we're doing, Tier 3 is not going to be available, but you can still have the same options for quarterly with Tier 1 and with Tier 2. So instead of having a 2-year lockout and a 10-year term, we've changed it. So Tier 1 contributions are allowed a minimum of $1,000. Okay, so you can get in. However, our goal is to get you to a retirement account as quickly as possible. So the 2-year lockout is now in place for the smaller investments that are less than $15,000. Now, some will say, well, I can't do that. That's okay. It's only for 2 years. But you got to realize the purpose of this is to get enough money accumulated to get you into a Roth. Now, you can do the Roth right off the front if you wish, and I highly encourage you to. All right, and I'm going to show you why. And again, like I said, in a moment. Tier 2 contributions and withdrawals can now be done quarterly. So instead of having just an annual option to move money in and out of your retirement accounts, it is now quarterly. So you see, we've kind of hybrided it. We've moved the Tier 3 out of the game. You can put your money, your cash, into Tier 1. As long as you have $15,000 in there, you can access it quarterly in and out all you want. For those of you who are just putting $1,000 in, my goal is to get you to move that as quickly as possible into a foreseeable retirement account. Now, I'm going to show you in a moment how that's going to work. Just bear with me. All right, so the neat part about putting money into a Roth. Now, luckily this evening we have Megan. She's going to go over that in detail tonight. By the way, if you had a chance to visit with Megan, man, that girl's smart. You're really going to enjoy the things she's going to have to share with you tonight. And I know that she shared with us at the Las Vegas event, and she brings a lot to the table, guys. So you'll get a lot out of that conversation. But one thing that she's going to make you aware of, I'm kind of just introducing a little bit, is your original contributions that go into a Roth are actually allowable to pull out without having any kind of a taxable event. The 5-year requirement's not there. There is a requirement of 60 days to get it back in, or you lose the money you did have in it originally. But still, you have an opportunity. So if you do need cash short term for whatever, you got it. It's there, and you can get to it. Okay, so now I'm going to step into another element that I want to share with you. Having done taxes for 31 years, and my business was called Insider Refund Strategies, my focus has been creating strategies to help people reduce the amount of taxes that they pay. I don't do anything that is shady. I don't do anything that would cause a difficulty. You've heard me say many times it's got to be a win-win-win all the way around. Well, here is something that I think is going to help you understand a little bit better how that looks. So I'm going to step into a spreadsheet real quickly. And one more time, I get to thank Megan. She helped me with this particular spreadsheet information. But I want you to see this. I want you to see this. By the way, this spreadsheet is downloadable. It's on our website. You can have it. It's free. And I expect you to play with it. But I want you to see some things that are about it. My goal is to get people to have at least $10,000 to invest. Now, how long does it take to get there? It depends on two things. How quickly you can contribute and how quickly we can grow it. How fast can we help you make that money double, triple, quadruple in value to get you to an amount where when you do your retirement accounts, you've got something that's viable for you. So in this particular spreadsheet, in this example I have right here, I'm showing a $10,000 investment. So let's just say you're coming on board, you have $10,000. It happens to be in a Roth. Now remember, there are requirements for getting into a Roth. It has to do with age, the amount you can contribute, alrighty, and realizing we have a 5-year aging period on this thing before you can make withdrawals, along with being 59 and a half. However, if you put 10 grand in, let's just say it was 10 grand that was in there to start off with. Currently, and I'm going to show you in reality in a minute what we're actually doing, but currently we are, at this point in time, 60% per year. Now that's only 5% per month. We're currently beating the heck out of that. But that's not to say it's always going to be. I feel like I can comfortably say, guys, we can really look at doing 60% per year. Now, you're not going to find that just about anywhere else in the world, but we're doing it here. Also, remember that we have a high water fee, a high water maintenance fee that's paid to the guys who are doing all the work to make this investment happen. That high water fee is 25% on the major one. The other one's a 35%, but it doesn't have that much of effort it's going through right at the moment. Now, what I've also put in over here is an opportunity to calculate what your taxes are. So I have on here your 2018 tax brackets. And I've also included down below all the states that have taxes. The gray ones obviously do not have taxes, but all the rest of them have taxes. And there's my beloved Oregon being second highest to California. And you can kind of calculate a percentage based upon what your federal taxes are. In this particular case, I'm saying that this one here is a single person. Their income level is 12%. They're making between $9,000 and $38,000 a year. They've managed to come up with $10,000 to put into this account. So it's 12%. I added 3% on for taxes for the state, just as a number to play with. So this tax number will change as their income grows. As their income grows. So over here on this side, under the taxable side, that $10,000 would yield $6,000, but the tax on that would be $900. The high water on that $6,000 would be $1,500. So the cash balance would be $13,600. Over here, the same $10,000, the same profit, the high water is the same, but the cash balance is $14,500. So the first year, you have a gain of $900 by simply having the Roth set up, because none of the gains on this side are taxable. So let's say you put 10 grand into this thing, and you decided you're not going to do anything more. That's it. I have $10,000. I want a retirement account of $1 million. How long will it take me? Well, that's easy. Go over to here, and you'll see 1.252 available in the 13th year. But it's only, less than half of that if you're doing it in cash. Do you see why I'm moving things away from Tier 1 and away from Tier 3? If you want to have a retirement, a very successful, tax-free retirement, you have to plan. And part of that plan is using, in this particular instance, a Roth. Now, there's another one that's available, and I know that Megan's going to talk about it in a little bit. But I want you guys to see this is a very viable way of being able to calculate what it is that you want. So, for example, let's say you wanted to put in $25,000, and your income level was significantly higher, and so you say at a single person you are at 35%, and you lived in Washington where there isn't any kind of a state tax, so we changed this to 35%. Okay, suddenly this is what it looks like. Well, you would attain your $1 million in the 10th year. But You'd only have $214,000 if it's cash. So do you understand where I'm going? This is why I want you to understand this. This is part of your education that you're going to be accomplishing by being here. This is why we do the continuing education after the events. So this spreadsheet is available for you. You can download it off of our website. And if you give me just a moment, I'll even show you where it's at. Under Investment Clubs, down here you'll see that same spreadsheet that I started you out with. And there's the link. You can download that and play with it all you want. So that's the difference between taxable and tax-free returns, guys. This is why I want you to see that. And this is why, honestly, why I've asked, for Megan to be here. I also wanted to show you very quickly what it is that we are accomplishing with our flash forward strategy. Now, we've been using another strategy primarily for quite a while, but it had a great big hiccup that came to its face somewhere about mid-January, and it was completely unforeseen. They have 4 years of just beautiful, beautiful, and even with the returns, the big drop they did incur a little while ago, it would still come out to 40+% per year just sticking with it. However, this is not what we're doing. Currently, with our program called Flash Forward right there, which we started this on January 16th. And I'm telling you, we started only because we didn't have a display. It's not this young. It's an old strategy that's been well tested for a long time. We just didn't have a way of displaying it. So we started this as a display on January 16th. And so approximately, and we're just a little over 2 months at this point in time, we've already achieved 34%. Which is remarkable. On a monthly basis, this is what it looks like so far. Our first one, we only had, the 16th half a month to play with. We did 14.23 in February. We're at 11.5% so far, and we're only on the 22nd of the month. I'm expecting that to achieve well over 15%. So that is what our trader is currently doing. So add that in with tax-free, and what do you see? Now, why is that so important versus an IRA? Now, an IRA, you make a contribution to an ordinary IRA, you get a deduction on your tax return of up to $5,500 or $6,500, depending on your age. That's great, but you throw it into this type of an investment, when you get to the point of retirement and access that at 59.5, the amount of money that's grown in here, tax-wise, is going to hurt. It's going to hurt. You're much further ahead to do everything you can to focus into the Roth. Yes, the 5-year aging thing is there. Can't do anything about it. Yes, the 59.5 aging thing is there. Can't do anything about it. But when you get this kind of a return rate with that kind of an option, it's insane not to take a look at it seriously. Right? So that's what our strategies are currently doing at this point in time. And obviously you can see it's just great right now. And so our other job is we're always looking for something else. I haven't found anything else that beats this particular one at the moment. All right? But that's what we have. Okay. So how do self-directed retirement accounts? That's so funny you should ask. Now at this point in time, I'm going to ask Megan. Megan, if you'd hit *6, please.
Can you hear me?
I can hear you. Thank you very much.
Perfect.
All right. Now, I have Megan's PowerPoint. I'm going to run it on my machine. Like I said, I'm hoping we'll have a little fluidity in what we're going to do with the presentation here. But I want to thank Megan for having come, all right, to be on our show this night. We have worked now with Mountain West, gosh, how long, Megan?
I think 2 or 3 years.
Something a long time. We've been together for quite a while. And I really enjoy working with them. I found them to be very prompt. We've compared their fees. They've just been great to work with. Megan's even done a whole bunch of videos, which will be available on our website as soon as I get a chance to plant them. I just got them today. okay, to help people get through the forms that you need to get accomplished in order to establish these things. Particularly, how the heck do you put dinar in a Roth? We got a video for it, guys. It will be on that IQD-related page. So watch for it. Hopefully I'll have that there by tomorrow. All right, so at this point, Megan, I'm going to kick me out, and I'm going to put you in.
All right.
Okay. And we'll get this started.
Perfect.
Okay. Now, I started you here, Megan, so that everybody can see you. All righty.
Yes, I am Megan Galane. I'm the Director of Business Development, and thank you so much, Bob, for having me on here. I love doing webinars and podcasts and everything with you. We always have a great time. I'm also a member of the American Banking Association as a Certified IRA Specialist Provider, which just means I can talk to you all about IRAs. Why should you self-direct? You're able to take control of your retirement. You're able to have the freedom to invest in what you know and understand, drive higher returns, and you have a larger range of investment choices. Self-direction is really just the open playing field of retirement accounts. So on this webinar, we're talking about SimTrade Pro, and then we're also talking about dinar. So I will walk through each one of these types of accounts, and when I go through the processes, we will talk about that in both of those basically account types. The first part's going to be really boring, and it's going to be all about IRAs, and then we'll get into fun stuff, just about the different types of IRAs. So traditional IRA is for individuals under the age of 70 and a half. You do have to have earned income, and deductibility is based on your annual income. This is something I'll talk to your CPA about. The benefits, you're able to have a tax deduction, potentially, lowering your current tax bill, and you may invest for retirement and still access your funds for investment needs. We are going to walk through now what an actual traditional IRA looks like. Oh, totally missed you. Contribution limits, those are kind of important. Under the age of 50, you can contribute $5,500, and over the age of 50, you can contribute $6,500. This is a contribution that's made out of your pocket. You do have to have that earned income, which is W-2 or 1099 income, and in order to contribute directly to your IRA. But once that's in your traditional, right now you can contribute for 2017 and 2018. So you're looking at quite a bit of money you can put away right now. You have until April 17th for the 2017 contribution, and then April of next year for the 2018 contribution.
I'm going to step in just for a second here, Megan. Thank you. Clarity on this thing real fast, okay? For those of you who have dinar, you can set up your Roth right now and buy your dinar and populate it, alrighty? So if you do want to populate it for 17 and 18, now's the time to do it. It's the same thing with your contributions for regular old money, all right? Now's the time to do it because April 17th is coming around the corner. It's only 3 weeks away. And this way you can get 2 years' worth in one whack and be done with it. That's all I got. Go ahead.
And the traditional IRA, you may even have a traditional IRA or an old employer plan like a 401k or 403b. If you have one of those accounts, they can normally transfer or roll over directly into the traditional IRA. So you are able to use funds you already have, either in the traditional Roth, SEP, Simple, Individual, K. Everything we'll talk about today. If you have an account, you can use it. How does a traditional IRA actually work? So you have your IRA money. The IRA money then grows to this huge tree. So you make your investment, whether it be SimTrade Pro or into dinar, and it revalues. So you have your huge investment that you spent years making, but now you're at retirement age and you're ready to take a distribution. Well, the IRS wants some money. They gave you the deduction when you put the money in, so now you need to pay them, even on your big tree. So it's no longer the $5,500. It's everything that you made in addition. So they're getting more in taxes than they would if you would to have paid them earlier. That's an interesting sentence structure. The Roth IRA. The Roth IRA is one of my favorite accounts, and obviously it's one of Bob's. I don't think you said it enough at the beginning. The Roth IRA is for individuals of all ages because there's not a required minimum distribution. So all ages can contribute to a Roth. You do have to have earned income, which falls under W-2 or 1099 income. And you have tax-free earning, no taxation on withdrawals. You can invest for retirement, still accessing your funds for investments, and contributions can be made after the age of 70 and a half. So these are awesome estate planning tools. I have quite a few clients that do their investments, and they know that they're never going to take a distribution from this. They're building it for their children and grandchildren, but they still wanted to do something for them and have it tax-free. The contribution limits for a Roth is under the age of 50, 5,500, and over the age of 50 is 6,500. Same thing as the traditional, except when you put this into a Roth, you're not getting that tax write-off potentially. So just be aware that you will be paying taxes. It'll look like you still made 5,500 or 6,500 on your taxes. And then if you make too much, because there are contribution limits, if you make too much, the way around this is contributing directly to a traditional, and then you will convert to a Roth the next day. And I can help you with that process. I just need a traditional application, a Roth application, and a conversion form, and we can make it happen. And if you do it that way, you can still contribute for 2017. So you still have the chance.
That's important. That is important. For those of you who do not qualify for a Roth, whether it's your income's too high or whatever, here's your option to be able to make that happen. I told you earlier, we find a way. There's always a way. So have a conversation with Mountain West IRA. No matter what your situation is, there is a way to be able to put a Roth together. You know, the majority of the time. I can't say it's 100% of the time. I got people that are 85 years old and asking if they want to do the Roth or not. But I would seriously have a conversation with Mountain West IRA and see what these options are. All right.
All righty. Next slide. How a Roth IRA, just getting ahead of myself again. The differences between the traditional and the Roth. The traditional has a tax deduction this year or 2017. You have tax-deferred growth, which just means when you start making money, you do not have to pay taxes right now on that money. The Roth has the same tax-deferred growth because you do not have to pay taxes on that money, but it's tax-free retirement income. You can make the contributions past 70 and a half. You have flexibility with distributions, increased net income upon retirement, which is very important for some retirement plans because you cannot make over a certain dollar figure to maximize your benefits of maybe a company left or military, something like that. Income restrictions, you do have income restrictions, but like I said, there is a way around that. Now how a Roth IRA actually works, you will, this year if you were to contribute for 2017 and 18, 17 you'd pay your taxes and then 18 next year, you show the IRS I'm contributing to a Roth, but I have to pay you taxes right now and it just looks like I made that money, but really I'm planning for my retirement. So you're paying taxes on the seed, not the tree like that traditional. So now that you have your seed, that's your IRA money, the IRA money makes its investment, whether that be Dinar or SimTrade Pro, and it goes into this huge tree. Now you're ready to take a distribution and it goes only to the IRA owner. You no longer have to pay the IRS. There should be one more little no sign. You no longer have to pay the IRS because you've already paid them. So the IRS isn't worried about you paying taxes because they already have their money, which is an awesome, awesome way to grow your tree. Health savings account. The health savings account is for individuals of all ages as long as you have a high deductible health insurance plan, which right now, if you have a bronze or silver plan in any type of insurance, you may be eligible for an HSA plan. HSAs are pretty awesome. I can't wait to go over it. Not covered by other health insurance. You do only need to have one health insurance, not enrolled in Medicare, and not another person's dependent. The benefits, you are able to have a tax deduction by putting money in your HSA, so lowering your current tax bill, but you have tax-free distributions for qualified medical expenses. So what does that really mean when you put it into context? That means that this is better than the Roth, basically, is what it means, because you get the write-off and you can get it tax-free for medical expenses. And then once you do go to Medicaid or Medicare, you can convert this into a Roth IRA, and then you have the Roth benefits, which just really puts this HSA above a Roth. So if you're single, the contribution limit is $3,450. If you're over the age of 55, you have an additional $1,000. And for a family, you can contribute up to $6,850 with a catch-up contribution of $1,000. If you're unsure if your health insurance has it, look at your paperwork, and it will say on our paperwork for our health insurance, it says it actually came with this really great table, which was surprisingly easy to read, and there was a line that just said if an HSA was allowed or not. So if it is allowed, then you can look at this account. This account can invest in dinar, and it can also invest in SimTrade Pro. So you have the option of using this to the same benefit as you would a Roth, except if you ever need money for medical expenses and there's cash in the account, then you can pull that out tax-free. We do not have a debit or credit card to go with this, so if you want to use it regularly for medical expenses, then we're not the right HSA holder for you. But if you want to use it for investments, we are here for you. Now, employer-sponsored plans. I'm going to fly through these really quickly, but for individuals who are self-employed, give us a call and we'll walk you through these slower if you are interested in setting up a SEP, Simple, or Individual K. I'll spend some time on the SEP, barely any on the Simple, and then Individual K I'll spend a little bit more on because it's a very complex account. It's like a full-blown 401k plan. The SEP. Who is it for? Sole proprietors, independent contractors, self-employed partners, corporations, or S-corps. The criteria, you do have to be self-employed individuals who received earned income. And the benefits, you're able to have a retirement account with low startup costs and administration fees, helps you to reduce business taxes, easy to set up and run, and contributions may be made to your traditional IRA. This is very simple to a traditional. It works just like a traditional, actually, in the sense of taxes. You get the tax write-off. You're able to use it for investments, but when you take a distribution, the IRS wants their portion. You can put 25% of adjusted gross income up to $55,000 for 2018. You cannot go back to 2017 with this account. So up to $55,000, your company does need to make quite a bit of money in order to fully maximize this SEP. You'll see realtors or some investors will have SEP accounts. Simple IRA. The Simple is for individuals and companies with 100 employees or less. It is good for self-employed or S-corps. We see very, very few of these. But the criteria is for self-employed individuals who received earned income, and the benefit is low startup costs, helps you reduce business taxes, and easy to run and set up. If you are looking at doing this, you need to inform your staff before October. So if you are looking at doing that, make sure you think of that earlier than the end of the year, just because you do need to inform your employees. The Simple contributions for 2018 can be 100% of salary up to $12,500, and a catch-up if they're over the age of 50 of $15,500. The Simple is the employee portion, so that's what we just discussed, and then the employer. This is the reason you do not see very many of these right now. The employer has to pay whatever they put in their account. They have to match every single employee that's eligible. So they have a dollar-for-dollar match of annual compensation to all participating employees up to 3%, or 1 to 3% non-elective contribution to all eligible employees regardless of participation up to $5,300. And that's really why you don't see those anymore. If you do, it's like a mom-and-pop burger place where the people don't care. The individual K plan, we have 2 webinars on these, on part 1 and part 2. That is how complex this account is. It is a 401k plan for the sole proprietor, independent contractor, partnership, S-corp, or any other corporation. Criteria, you have to have a defined contribution plan for businesses that employ only the owners, spouses, and partners or children. You cannot have common law employees with this individual K plan. The benefits of this K plan. Reduced business taxes. You have the option for tax-free borrowing up to $50,000 if you ever needed a loan. The largest potential contribution for businesses without employees. You have a deemed Roth option, so you have that tax-free option. And Mountain West allows for you to have checkbook control for on-the-spot transactions if you are interested in that, or we can do the record keeping for you. The contribution limits for the individual K, you have the employee portion and the employer portion. The employee portion, if you're under the age of 50, this can be a Roth or traditional, $18,500. The employee needs to make that 100% of earned income up to $18,500. Then you have a catch-up contribution of $6,000, which can also go into the traditional or the Roth. Then you have the employer portion, which is 25% of compensation up to a max of $36,500. So if you look at the brown gold color lines, employees contributions for individuals under the age of 50 can be, if your company makes the allotted amount, can be $55,000. Then the employee, if you're over the age of 50, can be $61,000. Now keep in mind this employee portion can be 100% Roth. So I actually have individuals who only wanted the Roth and they wanted to be able to put the $18,500 in. They were not worried about the company making money, and they were able to put $18,500 away for their Roth account, which is an amazing tool. And then once they do start making money, they can always open a traditional for a write-off, or they can contribute to that traditional and convert it later. So this account is just amazing. It's an amazing beast. Account funding options. You can do a rollover, direct rollover, which is employer plan to IRA. The transfer is IRA to IRA. You can make a contribution, which is an out-of-pocket contribution. You just have to have earned income. And a conversion, which is your traditional IRA or old employer plan to a Roth IRA. So you're benefiting from some funds you put away years ago or even recently. I have videos to help fill out each one of these forms. So if you do need help filling out forms, Bob has those videos. That'll be on the website, like he said. And we're always here to help you as well. The direct rollover and rollover, are there slides after, Bob? Or should I just talk about them? Okay, perfect. Funding with a rollover. The rollover means you actually take receipt of the funds. So the IRA or the 401k company would actually send you the funds. So let's say Fidelity sent you the funds. You have 60 days to get these into an IRA. 60 days without making this a taxable event. Please don't wait till day 60 because it does count mail time. We need to receive it before day 60. So once the funds are with you and you decide to put them in an IRA, you contact us, open your IRA, and get it funded within 60 days. I'll still need a rollover form, and then you will be A-OK. Some advantages, you have the continuation of tax-deferred earnings and no immediate taxation upon distribution. If you do go this route, the company will report it as a distribution to the IRS, and you may incur taxes if not deposited within the 60-day time frame. And some companies or 401k plans will actually withhold those taxes from the amount until you can prove that it went into an IRA, and then they would give you the remainder. So that's something just to keep in mind if you're doing a rollover. Most non-direct rollovers, so a rollover that we see, somebody learned about the option for self-direction after they already took a distribution, and then they just get it in there within 60 days. We see very, very few of these rollovers. Now, a direct rollover is your old 401k, 403b plan, and the money goes directly to Mountain West. We do realize sometimes the holding company will not send it to us. They only send it to the address on file. And as long as you get it made out to your IRA, they can send it to you, and then you just forward to us. But you never deposited it, and it was made out to your IRA, so you don't have to worry about the taxable event. The advantages of this, you have continuation of tax-deferred earnings and no immediate taxation with a direct rollover. Transfer, if you have an IRA, this could be traditional, Roth, SEP, simple, even an HSA or an IK account. You can have your old IRA, fill out the transfer form. We'll actually initiate the transfer for you. So if you do not want to break up with your stockbroker or something like that, you just have to sell your stocks, and then we'll actually move the cash for you, and that'll go into a self-directed IRA. The benefits of this, you do not have a continuation of tax-deferred or tax-free earnings. It's not reported to the IRS as a distribution. They don't even see transfers. And you have an unlimited number of transfers every year. Mountain West does not charge for any incoming transfers if they are a check, and if they're a wire, we only charge the wire fee. So you're only getting bank fees when you do that. Funding with a conversion, you have your old employer plan or your IRA, SEP, or simple. You complete a conversion form, and once the conversion form is filled out, you will have a new Roth self-directed IRA. Perfect. Advantages: tax-free earnings, tax-free distribution, tax-free income, and no required minimum distributions at the age of 70 and a half. Disadvantages: it is reported as a distribution. This is a taxable event, but you have tax-free distributions. Oh, your tax-free distributions cannot be made until the greater of 59 and a half for 5 years in order to earn that full tax-free lifestyle. Now, how does a plan work? We made it through the really hard, boring stuff. Let's talk about something fun. I'm going to go through the process of dinar first, and then we'll go over the process of actually investing in private stock. So you choose a self-directed, choose a self-directed IRA company, which is MountainWestIRA. You can choose an account type, which is traditional, Roth, SEP, simple, individual K, or HSA account. You open your account with an account establishment packet or an IRA starter kit, and then you fund the account with either a transfer, rollover, direct rollover, contribution, or conversion. And then you select the investment. Here we only have 2 investments we're dealing with, which makes this so simple. So in this specific circumstance, with dinar, you'll select the investment. You know you're purchasing dinar. What you'll do now, you will call the dealer. You'll structure the deal. You'll do their paperwork that's required, making sure your IRA is purchasing the dinar. If you need help with that, we have a template that can walk you through that, and you can call us. And then now you have it all structured with the dealer. You sign as read and approved on the paperwork they give you, and you send it to Mountain West. Then you'll also structure the payment structure and everything you need to with the depository. And the depository will have you sign paperwork as well, and they'll want to know where the money's coming from to pay their fees, which will be your IRA, and it'll be held in the name of your IRA at that depository. So you do have 2 off bubbles when you're doing dinar, and once those are all done, that's part of the investment purchase. So then Mountain West IRA will purchase the dinar on your behalf, on your IRA's behalf. Will sign as buying the actual dinar, your IRA will, and then the dealer will send the dinar to the depository, and they will hold it there for safekeeping. And once it revalues, then you're able to talk to the dealer and the depository and get that situation worked out again if you choose to cash it in. Now the IRA owns the asset, so it's just sitting there waiting for it to revalue. Your IRA will have to pay the depository fees that are associated with that dinar, so make sure you have enough money in your account to pay those fees. So that's the really simple process when it comes to purchasing dinar. Let's go through this all again. We're going to start at number 5 for purchasing into this. I want to keep saying Victory Investments, and I know it's not that. Bob, what is it called again? Freedom
Trade Pro into any of our
I can say
platforms.
Pro. Okay,
yep,
perfect. All right, SimTrade Pro. Select the investment, and any of you that do not know, Victory Investments was another investment SimTrade Pro did, and that's just in my head, keeps popping up in my head. So it is associated. It's not just some random name. And so SimTrade Pro, you select the investment. Then with this one, you'll have a direction of investment form to fill out, and you'll sign the documents as read and approved. And you're actually purchasing private stock in this specific group. This group then will have its own investment, which you run with Bob and you guys know about. All we know about is you purchasing into this LLC. Now, once the money is in that LLC, normally we send a big group wire, so the wire fee is very nominal, and you don't have to worry about too many fees when getting money in and out. We try and combine as many transactions as possible when doing this. And then your IRA will own a portion of that LLC. So when it does come to fruition and you've done really great and decide to cash out, that money will come back to your IRA per that percentage that you purchased. And that's really how self-directed IRA works. I am Megan Galane, just in case you missed that. My phone number, you will actually want to reach Bianca or Diana. If you do get a hold of me, it'll be at those numbers, 727-222-4200. I do assist with calls, but now I'm more on the back end, making sure we have all the webinars running and educational information. But Bianca and Diana are on my team as well, and they can assist you with any of these questions. The 866-377-3311 number rings to both of our offices. We have two, one in Boise, Idaho, and one in Clearwater, Florida, which Bianca and I are out of, and Diana is out of the Idaho office. And you can reach all three of us at accounts@mwira.com. That goes to all three of us. The first one that's available will answer you. So that is the fastest way to get a response via email. And then you can also go to our website for all of this information in written form at MountainWestIRA.com.
Okay, woo! All right, guys, I told you she had a lot of information to share, and I realize some of it's going to say, oh, well, that went over the top of my head. That's okay, because you realize you're being hit with a fire hose one more time, and the information here, not all of it may be applicable to you. You may not have a business. However, remember in the event when I told you about we have a 20% reduction now in taxes for those who have a flow-through business? And if you want to tie that in with doing one of their retirement accounts where you could funnel all of the net earnings into a Roth at $18,500, it's always a game, guys. It's always a game. There's a million ways to make this thing win. And the neat part is that we have their services to help you to accomplish that. And then we have our investment options that are working so extremely well. So, Megan, thank you very much. I'm going to kick back over into mine now. And,
thank you so much for having me. I really do enjoy working with everyone associated with Bob. Everyone's been great. And you can always call us with any of your questions, and we can help you guys out.
Okay, so Megan, hang on just for a second. We're going to come back to you in just a little bit. Okay, and then obviously to contact us for more about our SimTrade Pro partnerships, our website, simtradepro.com. You know, I've already shown it to you several times. I keep working on it all the time. And you can always check out the gains that we've got going on these particular strategies that we're currently utilizing. You'll find those under the header for investment clubs. Okay? Then also, you can download our taxable versus tax-free spreadsheet. I just showed it to you. I highly encourage you to do that. To join SimTrade Pro, you go to simtradepro.com, join us, or if you go to the website, you'll see there's these leads that always take you there. Gee, that's a surprise, huh? And you can also call Michael Gardner. Now, for those of you who had a chance to visit with Michael before, you know he is great to work with. He's wonderful. Call him at 888-371-447, extension number 2. Now, Michael has handling this part of it. Our membership's being handled by Kathy, and she does a tremendous job in keeping things straight. She answers questions and all kind of stuff. Michael's primary job is to help with the enrollment. He also is your connection to getting with Mountain West IRA to kind of handle any kind of questions, enrollments that's with them. He does a great job, guys. I mean, Michael is a huge asset to what we're accomplishing here. So feel free to call him. So my invitation is, if you would like to know more about what we're doing, if you would like to see the possibilities or to enroll into what we're accomplishing, there's your chance. Give Michael a call. He'll be glad to support you with it. I know that tomorrow he's available 100% all day long. Give him a call. Okay? All right. And this presentation obviously has been recorded, and the link will be emailed to you, so you'll have something to review as part of your continuing education in being with the Breitling events. If you do not get this for any reason, please call Michael. Okay? He'll have a link for it. He'll be glad to share it with you and answer any questions that you might have in regards to it. Now, for those of you as a reminder, a simple little reminder, Tony and I are going to be in Atlanta on April 7th for a Breitling event. We are going to be doing lots more coming up here very, very shortly. You can always see by going to his blogs, he displays during the blog presentation what's going on, where we're going, all that kind of stuff. All right, so I'm going to stop right there, and we're going to open this place up now for questions and answers. So here's my invitation. I'm going to leave everybody muted. If you do have a question, please hit *6. Identify the person who you would like to have answer, whether it's myself or Tony or Megan. Ask your question and then *6 so that we can have a clear background for conversations. So, who gets to be first to come ask a question? Remember to get on here. Just hit *6 on your phone or unmute on your computer.
Hey, hello. Bob, this is Penny. I have a quick question for you.
Yes, Penny, go ahead.
The question I have has to do with the gifting assignments. What is the benefit of those? Like, where do they get used and how?
Good question. Okay, the gifting assignment, the purpose of the gifting assignment is to simply protect the estate. Now, in the presentations I did in Los Angeles, I showed you that the estate tax limitations had been changed to $11 million for single, $22 for married. So what that means is that at the time of your passing, if you're single, if you have more than $11 million in value of your asset, then they can take up to 40% of that away and your heirs would not receive that. If you're married, it goes to $22 million. The purpose of the gifting assignment is for you to be able to share dinar as dinar, okay, instead of cashing it in when enhancing your taxability to it and reducing the estate value. Now, if you have 5 million dinar as a number, and let's say it did come to $3, and let's say you were married, so that means that the estate value based only on the dinar would be $15 million. Do you need to worry about the estate? And the answer is no, you don't. If you have 20 million dinar and it comes to fruition at $1 and you're single, do you need to worry about the estate tax? Yes, you do, because it's 11 million. So the purpose of that is in order for you to share that dinar to reduce the estate tax, because you've shown by record who you gave dinar to. Now, you do not give that form to the individual that you shared that with. That is for your records only to give to the IRS if an inquiry is made. So this is why I tell you, this is something you want to do now. It's free. It's on the website. Go get it. That's step 1 in tax planning for the dinar revaluation. Step 2 is doing the Roth. All right? So that's the value of it. That's why I encourage people to do it. The nice part is if you never use it, so what? If you do need it, yeah, you need to have it, and you need to have it done now. Does that answer your question?
Yes, thank you. I thought I had one more question relative to that, but maybe I'll think about it for a second. It had to do with, and maybe I can meet up with you too.
Okay, that'd be fine.
Okay.
All right.
Alrighty,
that
thanks.
sounds great. Thanks, Penny. Appreciate the question. All right. Who's next?
Real quick, Bob, can I put a plug in?
Yeah, feel free, Tony.
Yeah, I wanted to say something at the end of Bob's talk, but I want people to realize that our goal with this new product that Bob has, I shouldn't say product. It doesn't sound, but it is. Our goal is to get you, up to 10,000, and from 10,000, you guys see the numbers on that spreadsheet that he had up there. And so that's with this $1,000 investment starting off. And like he talked about, the speed depends on if you want to add more. But if you don't, it's set up to where it's optimal. And you can start off with 1,000. So you guys need to call Michael, get that information, and talk to him a little bit about it. That's what's so phenomenal. That's why we're actually, this other stuff's fine. It's great. But we're specifically letting people know, and you guys are the first people to know about it. So that's our goal, is we want to get people retired. That's it. And, it's one of those things, you guys, look, your prayer's been answered. And, I'm not saying that as, you need to take it seriously. So the best thing for you to do is to find out what it is that you can do and link at that spreadsheet, talk to Michael, and go over it with them. Even if you decide not to do it or whatever, that's fine. But investing is all about options, and so this is what I throw on the table. Investing is also about comparing. If you can find something better than this, you have to let Bob and I know. It can't, because I can't find anything better than what the package that he put together for you. So that's our goal. And so I encourage you to sign up and just get together with Michael. Anyways, I didn't get a chance to close the talk that you gave, Bob. Sorry about that.
Don't worry about it, Tony.
I didn't anticipate, you'd be done, and then, the other part of it, Megan, I wasn't anticipating that, so I apologize, you guys.
That's okay. You didn't get a chance to see the spread, the presentation early anyway, so that's okay. It's not a problem. All right. Anybody else got any questions? It should be for myself or Tony or for Megan.
Hi, Bob. This is Sheree. I have a question on the IRAs.
Okay, Megan, that's going to be yours.
I'm ready.
My question is, the scenario is I have an IRA with a bank. I have a Roth IRA with a, I guess, a consulting company. I guess it would be similar to yours. So from what I'm understanding, and this is new to me, is that I could roll money from the bank Roth IRA into the Roth IRA. Is it limited to, and I'm sorry for this question, it's just all new to me, is it limited to the $5,000 or $6,500 per year, or could it be any amount?
So if the money is already in an IRA, then you can convert or transfer any amount. So if it's already in an IRA, you're looking at a transfer, which can be $5,000, $1,000, or even $100,000. It's up to you what you'd like to transfer. And then converting, you just want to convert whatever you're comfortable in paying taxes on.
Okay, and I guess that was where I was a little confused, which would have been the second half of my question. And with that, and if it's a transfer, I'm understanding you correctly, there is no tax, but if it's converting, then I would pay the tax that's coming out of the regular IRA, pay the tax on it to go into a Roth IRA. Is that correct?
That is correct.
Thank you, ma'am.
You're welcome. Great question.
This is Debbie.
Hi, Debbie.
Hi. This question is for you, Bob.
Okay.
When you buy the Roth with the dinar, or the Roth buys the dinar for you, and then you said they hold it until it revalues, can you hold it as long, like if it revalues at 50 cents and you want to wait till it goes up to $1, can you hold it in there until you tell them to revalue it? You understand what
That's correct. Yes, I understand what you're saying. That's a good question, okay, because I've heard it before. All right. Yes, you can wait as long as you want to wait, before you make that conversion. Now, the other part that's really neat about the Roth, because anything that happens inside of that is not a taxable event. So let's just say, for example, you opened up the Roth today, okay, and next week it came to fruition and it was at 50 cents. But you don't want to wait anymore. You're tired of this Iraqi game. I know I'm tired of it too. All right? You could cash that in, take it as dollars, and then put it into the platforms that we're currently doing and let it grow. Still has that 5-year aging frame it's got to play with, and it would be something that at the end of 5 years you'd have access to. The other option, it comes out at 50 cents. You say, nah, I'm going to go for the gold on this one. I'm going to wait until $3.47, which might be in your third lifetime from now. However, it could be a possibility. And so, yes, you can hold that until you decide that you want to go ahead and cash that in. So it's entirely up to you.
Okay, thank you so much.
You are welcome. Thanks for the question. All right, who's next?
Bob, if no one has a question, I want to ask Megan a question. And this
Sure.
is, if we already have a Roth IRA with Mountain, and we do have dinar in it, can we also use that same one for this other trading platform you're talking about?
No, it'll be more expensive, or it'll be, no, you won't want to. The fee schedule actually works better to have 2 different IRAs.
Okay.
And we did, that's just how it's structured. So you'd open up the same process you did for that dinar IRA, you would open up another IRA for this specific investment.
Okay.
So that's something else that people have been asking me, and I'm glad we brought that up. Thank you. People ask me, well, am I limited on how many retirement accounts I can have? You know, and the answer is no. You can have as many as you want. The only limitation you have to deal with is the contribution. How much can you apply toward your retirement accounts? So it can have multiple accounts as long as you do not exceed the $5,500 for those of us who are younger and $6,500 for guys like me who are older. Okay, that answer your question?
Perfectly,
Bob?
thank you.
Okay,
Bob,
anybody
this is
else?
Dana.
I have
Yes, Dana, go ahead.
Okay. So all these Roths and stuff, if you have the money, because once the whether your investment grows to such an amount or the dinar revalues, but you're nowhere near the retirement account that you can, or retirement age that you can start accessing the Roth, then, I mean, if you have the money, what do you suggest to do? Because I've heard about this infinite banking concept, where you can also grow that tax-free and take loans on it tax-free. Can you give any more?
This is something that Megan will probably have a better answer for. Megan, can you help us with this one?
So if you're nowhere near the retirement age and you have some money you'd like to take out, you can in a Roth take out your contribution tax, no tax penalties. You can always take it out with a penalty, but with your IRA where you're investing in SimTrade Pro, you can also invest in real estate. You can lend money, so you act as the bank and do promissory notes. You can reinvest your money in SimTrade Pro and do another program to keep growing that money. The goal of having this Roth IRA is to not use it when you're not retired. So it's kind of like that sheltered account where that age restriction makes it so you are using that for your retirement account. And and you can keep using that for investments, and you can keep using it over and over again. There's not a limit to the amount of investments that you can have inside of your Roth. Does that answer your question?
Yes, sort of, but you still can't take it out and live on it.
No, this is all retirement goal money.
Right. So even though you might have the money that you can retire at 40, you still can't technically retire because it's all locked up into a retirement account.
Okay, now
That's why Bob recommends only doing a little bit. You know, save some. If you're coming from the point of view of having dinar, that's what he's talking about. Don't put all your dinar, but you know, here's a foolproof way to create a retirement, and in the meantime, you have other dinar that you use to live off of that you've exchanged.
Right, and the other instrument that I love, which you guys heard me talk about, espouse for quite a while, is the charitable remainder unit trust, and that would be populated with your dinar. Okay, it could be then self-directed through, so we don't talk about CRUTs through the Mountain West, but I know they have them, okay? And that would come into our particular investment, and it would grow. And you would receive a percentage of the gross value of that account, either monthly, quarterly, semi-annual, or annually, and you could live off of that for the rest of your life, okay? And then leave that other investment in the Roth alone and let it get to that point where it's aged and you've gone to the point where you're aged and you can pull it out tax-free. That's how come, like Tony just said. I'm sorry, go ahead, ask your question.
So what's the benefit? I'm assuming you can use your SimTrade investment platform inside that CRUT, correct?
That's correct. That's correct.
So if that's going to continue to grow, wouldn't that still be kind of over and above what you, if you still had 10, 15, 20 years, grow over and above what you would be having in your retirement account?
Okay, and that's true. Okay, let's say, for example, and remember, guys, the spreadsheet for calculating a CRUT is also available on our website. I know I didn't show it to you in this particular event, but it is there. You can have it. And what you do is you put in, I'm refreshing just a little bit of the steps, so just bear with me for a second, okay? You establish the CRUT with an attorney. You go to a bank. You open up a bank account. You populate it with dinar. You do not cash it in and hand them dollars because you created a taxable event. You hand them the dinar. They then cash it, put it in as dollars. You then direct where you want that to be invested. So let's say, as an example, you had $1 million dinar. You put it into the CRUT. It's invested. It's growing. Now, if it's in our platforms, and let's say it's successfully doing 60%, it's going to make a heck of a lot of money. And you're going to get paid as the beneficiary / trustee of this particular account for as long as you live. As long as you live. And the gains that are going on inside this account are going to grow and grow and grow. So the percentage that you receive, it gets larger and 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 larger. So your growth on there is being attributed back to you. Now, as a strategy, for those of you who attended the LA event in particular, when I talked about when is enough enough, okay, when you take a look at your tax strategies and take a look at the brackets and decide where do you want to live, where are you comfortable at, you can always share the gains that are coming off of your Children Remember Unit Trust with a charity, which would reduce the amount of money that's inside of it, so you would have a set amount of money that you're going to receive. That's part of the strategy of having it. The other strategy that's associated to it, which a lot of guys like, is they're going to let it just grow. They're not going to share that puppy with nobody until they're dead and gone and laying in the ground. All right? So that account would grow, and obviously your monthly or whatever time you choose to receive those funds would continue to become larger and 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 larger until you pass away. Then those funds will be given to a charity, however you designate it to work from. So in answer to your question, I think I got it straight. I hope I've got it straight. So if I'm wrong, let me know. You're going to populate your Roth because the intention of that is it's going to come to you tax-free when you hit 59.5. Okay? You populate the CRUT to support you between now and then. Now, once that hits, once that becomes, you've got all this extra money coming to you from a tax-free purpose, then you can take your CRUT money and distribute it out to all kinds of charities, expand your world, set your children up to be a participant in it for so many years. I mean, there's lots of different options that can be done with it. So there's various ways to make it in a strategy work. Yes, populate some Roth, populate the CRUT, even pay the freedom taxes I talked about before, cash in some dinar, take care of your debts, pay your professionals to give you a hand, and go from there.
Okay, so with the charity, with the money that you take from your CRUT and giving it away to the charity, is that a credit towards your? No. It's just your income deduction.
Yeah, actually, it's the money that you receive from the CRUT is considered to be ordinary income. You would report it on your tax return.
Correct. But then if you turn around and give that to charity, is that amount going to be
deducted?
Okay.
It'll be deducted on your Schedule A.
So you would need to deduct the amount that you need to deduct to get to the tax bracket that or give away the amount that you want to reduce your income to the tax bracket that you want to pay.
Correct.
Okay.
Good job. I love these questions. That's a good question.
So really, if you have way more than you need in the CRUT, then why set up a Roth if that's going to be way over and above prorate from the beginning?
All right, good question. So let's take a look at it. So you got to remember the Roth money. Okay, when upon your passing, that Roth money is going to go to your heirs, tax free.
Is that that's without an
effect on the estate?
Does not affect the estate.
Nope.
Okay. So basically, that's one more place you can put money and grow money without it affecting the estate amount.
That's correct.
I want to add a little clause. As long as you have beneficiaries on there, it'll go directly to the beneficiaries. If you have a trust or something, then that could potentially affect the estate, but it just depends on what you have. Most of our clients just have it directly to those beneficiaries, and they open an account upon your passing away.
Okay, but you said if it does go to a trust, that can affect your estate?
Depending on what's in the trust and what happens with that, yes.
Okay.
Yes,
so as long as you have direct beneficiaries, it's okay.
Yeah, but that's not the trust for the CRUT, okay?
Correct.
Because it's already designated as a charitable organization, and it's going to be gone upon your passing.
That's
Correct.
like a family trust or a family trust is the best way to put it.
Okay. Okay. Thank you so much.
Okay. Thank you. Good question. Okay, who's next?
I have a question. Hi. This is a little indirect, but how is the May election of the prime ministers going to affect us, or won't it?
Tony, that one's yours.
It won't, because it's just like the United States set up, that where our financial strategies on the way that our currency works, or what is that we're looking at, or whatever it is that we're competing, doesn't change. And so remember that the CBI, the Central Bank of Iraq, is independent, and so and they set it up that way. That way, if you have different regime changes, or you have Sunni versus Shia taking over Iraq, and it'll stay Shia for forever because that's the population, but it won't affect it in any way, shape, or form. If you notice that, between the two different prime ministers that they've had in Iraq, nothing's changed. That's because the request on how the economy is going to work comes from Parliament, and then it goes to the Ministry of Planning, and then it goes to the Ministry of Finance. And then it actually opposite. It goes to the Ministry of Finance, and then it goes to the Ministry of Planning, and the guys who actually manage the whole thing to make sure that it happens is at the CBI, the Central Bank of Iraq.
Thank you. I have another question to that.
Sure.
Are 140 and the hydrocarbon law going to be postponed until after the election? And does this have anything to do with us?
No, it doesn't. And the hydrocarbon law, there's no ground for it, because what happened is right after the United States conquered Iraq, we set up a straw man government, and there were, the debate was, should we federalize Iraq? In other words, it would be in 3 different states. You have the Shia in the south, the Sunni in the middle, and then you had the Kurds in the north. And the hydrocarbon law came into effect, or was on the table at that time, because you had those 3 sections, and then if different sections, there was more oil. So how do you distribute the wealth evenly? And that was why the hydrocarbon law was so important. But strategically, the United States did not support. And remember, it was still under a kind of a straw man government. You know what I mean? It was a makeshift government, and then we helped put together elections, and then that's what the Iraqi people actually elected their government for the first time since Iraq, Mesopotamia, ever existed. But what was taken off the table was the idea that it was federalized, and we did that very specifically. We didn't do that to for good reasons. We did that because we knew that it would create chaos. We understand exactly what was going on. We understand where Russia had. This sounds very strange because it's like, well, we're talking about Iraq. What's Russia have to do with it? Well, strategically, we looked at Russia, and for them to rebuild their military and renew everything. I mean, get the best of the best. They needed the oil to be $91 per barrel. And then so we attacked that. And then we got the price per barrel below $91 instead of renewing their entire military. They just refurbished it. In other words, they made their old equipment better. And so, you know, if there was stability in the Middle East, that means all those countries that are part of OPEC, that means they were free to compete. And it was, you know, and so we created chaos in the Middle East by making sure that they didn't federalize, and that's where the whole hydrocarbon law came from and all that stuff. And it's never been valid. You know, it's not. If you go look at the news right now, what do you have? You have the Kurds. You know, they're causing all kinds of messes with Turkey and Syria, and then you have the Sunni and Shia still split. And so, you know, to get the hydrocarbon law to work is to go back to the original idea, which was to federalize those three regions. Well, there's nothing to support federalizing those three regions. So it never had anything to do with the dinar at all. What was funny is the reason it came up, and some of these gurus brought it up, because it's mentioned every once in a while, and you know, they know it's never going to pass, so they say, well, they're just waiting for that. And it has nothing to do with their currency at all. Nothing. It has to do internally with Iraq and how the wealth is going to be spread between those three regions, which will never exist. So it has no bearing. Does that help?
Very much. Thank you. And thank you for everything that you and Bob do. I've been listening to you for years and years and years, and it is so helpful. Thank you, thank you, thank you.
Hey, we appreciate that. Bob's the new star of the dinar community because, you know, Bob actually, you know, there's a lot of stuff that people, you know, a lot of wondering. I mean, when I first got into it, the talk, I don't want to kind of put anybody down, but it had to do with, you know, where can I put this in a deposit box? And I remember back in the day, you know, in World War II, that the federal government could raid your deposit box. I mean, and, you know, what offshore bank would you use if you were going to use all this crazy talk? Well, Bob eliminates all that. You can keep your money here in the United States and the dinar. It can be protected, and you can actually manage a phenomenal strategy. You know, he has 35-plus years looking at institutions and making sure that they pay their taxes and watch how. So he understands how all this structure is put together. So I, you know, personally thank you, but it's, you know, Bob's the star on this stuff.
Well, so I would agree, and I have been emailing Bob. He answers. He's awesome. What an amazing, wonderful addition. Thank you.
Oh my God, I'm all embarrassed now.
I'm only sorry I can't see you blushing.
Oh, that's okay. That's okay.
Thank you for everything.
You are more than welcome. Tony and I love doing what we're doing.
Okay, bye.
This is a question for Megan.
I'm ready for your question.
Go ahead, Lenny.
Yes. Let me if I understand this correctly. If I have a current IRA and I want to roll some of it over into a Roth, I'm at 70 and a half. Do I still have to wait the 5 years to withdraw?
You will have to wait 5 years with your new Roth. So if you only move a portion of it, it'll only be the new Roth money. So you can keep a portion in your current IRA. Wait, sorry. Actually, you know what? Is that a Roth IRA that you currently have?
No.
Okay, so yes, you will have to wait the 5 years.
Okay.
And that starts January 1st, 2018, so you'll have 3 months under your belt.
All right, thank you.
You're welcome.
All right, who's next?
Is that
Hey,
George?
Bob, this is Gary.
All right, Gary, go ahead.
This is for Tony. Tony, I just wanted to thank you for the presentation in LA. The first slide that you showed, survival insurance and perpetuity. That one was
cool, huh?
Immensely helpful.
Well, believe it or not, it's a great little slide. I know it's just 3 words that are up there, or 3, but the reality is I did a research paper for a company that was doing a bunch of work for the RAND Corporation. And so what they wanted to know, they wanted to start looking at literally every war that's ever been recorded, or every type of skirmish, and with a small little definition of it. So it took us like 3 years to do this, and I was the main guy on it. And that's what we found out. Every one of them started off with agricultural wars. Before that, it had to do with just skirmishes on, who controls different hunting land. So you have your city, or you have an individual, a group, just like a tribe, and then a village, and then a city, then a city-state. And that's exactly, categorically, that's exactly how it all pans out. And then when you follow that, you can follow the beginning, where my specialty came in, where you can actually follow economics and how economics grew. But that's what it's all about. It's all about energy. And, energy moves matter. And then in between that, you have, how does the energy transform into that, get to that matter. So I know it is strange. It sounds very scientific, and it is, in definition. But it clarifies everything. So, I mean, just like I would get in front of a group of educators in Phoenix, and, we talk about politics, but I always start off with energy and how energy works, and they're like, what the hell are you talking about? And at the end, they understand fully exactly because, this is all about energy. That's all there is to it. A lot of people want to put something else and add something else to that. It's not true. I mean, you can. I know people are convinced into believing they're doing something for a higher source or whatever in war, but the reality is, if you look at where the wars are happening, you can always find out what it is that they're fighting for, and it's that simple. So, but it goes back to those 3 principles: survival, insurance, and then perpetuity. And that's exactly, like I said, if you want to be the elite a negotiator for a government, or that's what you do. It's like, look, let's say Donald Trump's the president. It's like, okay, I can go in and I can give advice to him. And so how would we do that? We would go in and we'd say, look, you became president, and so now you're in survival mode. Let's get you to insurance policy. Let's get you to where we know we can get you to another 4 years. And then after that's perpetuity. You know what I mean? How can we keep you into power for? That's exactly how you do it. But it's all based off of watching and going through the Encyclopedia of Wars on why these guys fought. And you have a whole group of military strategists who study the opposite end of that data on how did they fight it. That's pretty cool, though, huh?
It is, yeah. It's very cool.
So thank you. Thank you very much. That's actually the first time that's ever been talked about or presented to anybody outside of these corporations. I've never talked about that stuff before. You won't find a book. You won't find a book anywhere on it.
Yeah.
So you got a little bit of a preview on the book that I'm trying to finish. So.
Excellent. I'll wait for it to come out.
When I'm done writing this book, you guys probably won't see me again because they'll probably off me. But anyways.
Well, I just have one word for that: security.
Yeah, exactly.
But no, everything that you presented was very, very enlightening and helpful. And Bob, I don't want everything that you've done, and Megan, you too. You guys are all great. It's a great team.
Thank you.
Megan, yeah, me and Bob for sure. You know what I mean?
Glad you have me here for a reason.
All right.
No, almost every single one of them is wrong. Like, let's say on what's the United States doing with Russia, or how are we competing against China, or how are we competing, or how vice versa, how are they competing against us? You don't find anything. You don't find any of the truth anywhere. It's all very generalized information, and so it's the weirdest thing, So, as you know, that I put my information together as if I'm going to court. I don't just throw something out there and say, well, this is my opinion. That'd be a waste of time. So, and once you have that information, you should be able to compare. So that's what I'm trying to put the book together. I'm trying to put the book together to where you can kind of look, since the 1300s, the 1200s, and you don't need to go below that. There's a lot of history below that, but, and really were you at the LA event?
No, he
Me?
wasn't.
No? Okay. It's from the 1300s on up explains on how everything happened, because the crossroads, you have the modern banking, you have modern currency, supply times velocity, where that came from, and then the competing, and then you had the first international banks that were created in the 1700s. And then, how did they form? Then you had insurance. Where did insurance come from? Where did bonds come from? Where did the stock market come from? What was the first companies that had, when I first got into doing empirical data outside of the Republican Party was with corporations. So where did corporate, you have these militaries and stuff like that, and they have, intelligence, right? Counterintelligence, intelligence. Well, believe it or not, the best intelligence in the 1600s came from the Dutch East India Company. They had about 40,000 troops. They had like 30 ships, and it was a military ran company. And they, and their corporation, they would obviously there was going to be other corporations, or they had to dodge the English, they had to dodge the Spanish, they had to dodge the Portuguese. So that's where it all came from. So when you start looking at how competition and where that strategy comes from, and what they're looking at, it starts there. You know what I mean? For as far as business goes, and it just keeps going. So it takes a long time. It takes a long time to put together. But here's the problem that I'm having. Every once in a while I'll do a talk with like a special group or something, and the only purpose for that talk is to see if people can grasp what I'm saying. Not IQ wise. People are smart. I'm talking about to see if they, I'll go. What I'll do is I'll take them through a couple timelines, and I'll be very thorough on what I'm saying. It's like, now, what do you think about this? Based on the information that I give you, and some of it they can't connect. And this is pretty smart people. These are people who know history. So that's what I do. You know what I mean? I kind of, it's like what a trial lawyer would do, where he would go look up like 100 cases on something that he's going to be representing in a trial coming up. And so how did these 100 cases turn out? And he'll do the math on it. So that's what I'm doing. So it's tough. It's a little bit different from somebody else who, it's like, well, I'm just going to go do the research and just throw this out there. And if they don't like it, I want it to be right. I want it to be the most perfect book that's out there, and so people can understand what's going on with geopolitics, and they don't go, there's so much noise out there. It's unbelievable. None of it's true. Like, none of it's true. And I don't want to get into why or what type of conspiracy theory. It doesn't matter. What difference does it make? So it's not the information that's out there that's important, and it's not that the information out there that's wrong that's important. What's important is, how am I researching this stuff? What's important is, where's it coming from? You know what I mean? That's what I'm trying to. If I put a book out, that's what it'll relay. Is okay. It's like he's looking for empirical data, so you have to be able to sift through all that stuff and get rid of all the opinions. There's a lot of conversations that you're not going to have because it's your favorite color, and it doesn't go anywhere from there. So what can he pull out of the bag that's actually provable, and if there is a debate about it, you can actually show a reference. You know what I mean?
Okay.
So it's a little bit difficult. It is. It's not the ordinary. It's not a telltale book or anything like that. It's a book it's a historical book that represents real events, but the main idea of the book is to show you the strategy on finding empirical data, what I was taught, what I went through school for 2.5 years to do.
Okay.
So
Thank you.
You know, hopefully by the end of the year, knock on wood, you know what I mean?
Yeah. Okay, guys, also I have an announcement. The voice you hear there is Michael Gardner. That's the guy that you'll be visiting with to help you with your SimTrade Pro.
Oh, that Michael.
That's Michael, yeah.
Oh, Michael,
Yeah,
the book's already done. I'm just building it up since it's you. Yeah. I was just kidding.
All right. All right. Anybody else got any questions?
Yes. Will the recording also have the PowerPoint?
The one that we have right now?
Yes, the one that
yes.
is.
Uh-huh.
Oh, God bless you. Thank you.
Well, thank you. I'll take all the blessings I can get.
Just remember, though. Yeah, just remember, though, even though, you know, you have these PowerPoints and stuff like that, you know, Michael's there to answer your questions and get you the information that you need. So you have, you know, point of contact where you can, anything confusing or anything that comes up after this event, you guys, because like Bob said, you know, we hit you with a lot of information. And so you absorb it. And then, you know, you're going to come up with more questions. Please call. You know, that's what we're here for.
Well, thank you. I thought I may need to share some of it with my accountant.
Okay. Awesome.
And the other thing is, Megan, this is the first time I met you, so I forgot to mention how awesome, great your presentation was. Thanks, guys. Bye.
Thank you.
All right. Who's next?
Okay, I got quite a few questions here, so this is going to take a minute.
Okay, who we're talking to?
Oh, this is Gabriel, by the way.
Okay, Gabriel.
Okay, first of all, it sounds like it's more beneficial to move an IRA into a Roth. Well, what kind of taxes are we looking at in doing that?
Megan?
The taxes are based on how much you make, so it'll be your tax bracket.
Oh, okay. Okay, and then you said you can always just move a portion of it, not the whole thing, however much you want.
Correct. Yes.
Okay. Okay. And then, Bob, you were saying that the IRA inside of SimTrade Pro, when you're of age to collect it, you have to pay taxes on that. Is that correct?
No. Are you talking? Okay. Let me add clarity. Okay. If you have a cash investment with SimTrade Pro, you're going to pay taxes on it every year, because the amount that you're earning is being reported as through a K-1 through the partnership to the IRS. Okay?
Okay.
The money that you gain from being inside the Roth, even though we prepare a document that we share with Mountain West or whoever the hosting service is, it doesn't go to the IRS. They don't care. Doesn't matter, because that is going to come to you completely tax-free. So you can cash that in and do whatever you want with it.
Oh, okay. Okay. And then, if I heard you correctly, you're now using a different platform compared to the dips that just occurred the last couple of months here. Is that what you were saying?
Yes, the Steady Capture we've used quite a long time, and they've got a great 4-year history. Okay, but it's really quite interesting because we saw, and I say we, I mean I have to admit I have a lot of help with Jason Gospodarek, saw that there was something that was about to happen. And the strategy that we're now primarily, introducing everybody to, this flash forward one, was able to counter that. And it's continued to counter it, and we've watched Steady Capture just go down, 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 down. Even today, it had another major loss occur to it. And so, it's not becoming our primary strategy anymore. It's going to be our secondary. Now, do I believe it's going to come back and do well? Yeah, I think it will. He's got 4 years of history showing that's going to happen. But you also have to realize it's just like a battle. It's fluid all the time. So you monitor, you watch, you compare. Like Tony always says, you compare the numbers. We're just comparing the numbers. At this point in time, our return rate off of Flash Forward, which is phenomenal, is a much better return rate than what we're pulling off of Steady Capture. So we want to move more money into it and let it do its thing. Is it going to be the final all-time one answer to everything? I doubt it. because the markets flip-flop. They do what they do, okay? And so that's why we want to have diversification. So we keep our foot in with steady capture just to say, okay, let's watch you, see what happens. Because the guy that runs it, I know he's a genius. I mean, he is smart. He just got caught in a bad situation.
Just can you guys hear me? Am I off mute?
Yeah, you're on. Go ahead.
Yeah, just so you guys know, I want to make something very clear. I've been with some of the best investment firms on the planet, and this is one of the things. When Bob started SimTrade Pro, the things that we talked about was keeping it completely transparent. There is no black box. But one of the issues that came up is when you get hit every once in a while. The average person they can't take that, and they don't realize that we look at the yearly outcome. And so this is nothing new with steady capture and all that stuff. These dips mean nothing to me. At the end of the year, they're going to be at 60, 70% or whatever they've been doing every other year. It's not going to change, I promise you. So it's that's the way it works. It works just like that with all these other firms out there. The only difference is that this one you don't need to be a millionaire to get into, and you don't need to put a minimum of $1, $2, $3 million in. Bob basically operational. I didn't even see what would be a good analogy. I've been with firms that actually thought about doing this before. The way that way he set this stuff up, but Bob's actually the first human being that's ever done it. So, and that's what's going on here. That's why it's such an opportunity for other people. But as far as the Forex and how these things trade, none of this stuff is new. If you want to know how the elite do it, they're doing what you're doing right now. But it costs them, a fortune just to get in. So it's pretty cool, though. But don't worry about the stocks going up and down on a daily basis, weekly basis, monthly basis,
I'm not worried about it.
Or that because it will be. These guys, they don't lose. All right, But here's the difference between us and everybody else. You got two elite strategists. So one's negative and one's positive as far as how the market's going. So nobody has that. They have one strategy. That's it. So we always have ways to counter it. That's what's the other thing that's remarkable about our the way that we invest and how we do it and how we look at stuff. It's almost impossible to lose. That's why Bob was able to create this package to where you invest in 1,000, you throw it in, and we'll get you there. We'll get you into retirement. That's how we're able to do it. Nobody else is able to even think about that.
And the other part is, you can get in for 1,000, but the invitation now is to contribute as often as you can. The goal is to get you to at least 10 so that we can see you achieve something in that miracle $1 million mark within a time frame that's going to be while you're still here. Okay? And so my goal is always try to get it to $1 million in 10 years. If we can achieve that, then we've accomplished something. I mean, to me, that in itself is a miracle. But the other part of it is that we want people to be educated. This is the whole reason why we're doing this meeting today, guys. This is the extra bonus that comes to you because you've been willing to travel to these places where we go. And so instead of just hitting you with a fire hose there, which I know we do, okay, I want to be able to give you more. You've gone through the expense of time and money, travel to be there, but there's so much more. So, we want to continue with the education. Also, the educational drop-down page of our website is being created by Jason, Dr. Jason Gospel-Derrick. He's got marvelous stuff that we're going to be showing up on that website probably within the next couple of weeks. I'm hoping, that our members are going to be able to learn more. The more sophisticated you become in understanding and how this stuff thing works, it's kind of like, all right, let's just take for an example. And Tony, it's my turn to embarrass you, okay? When we first met, I went to Salt Lake because he was speaking. I had a client of mine, and I'd already been in the dinar for, 7 years, something along that line. And I was riding that guru circle, that hamster wheel that everybody gets caught on. And when Tony got up and started speaking, it didn't take me 10 minutes to realize that all of the fears, all the anxieties, all that stuff that I've been experiencing on that merry-go-round didn't make any difference. It didn't matter. Okay?
Right.
Tony brought to the table, here, look, this is the numbers. This is all you need. All right? That's what we're trying to do here. We're trying to help people to understand how the investments work. How, most importantly, how to use these self-directed, particularly the Roth or the HSA or some other option, so where when you get to that retirement, when you use that spreadsheet and take a look, how much are you really giving up in this marvelous growth opportunity that we're giving to you in taxes instead of having it come to you tax-free? You know, and this is legit. This isn't some kind of, you know, offshore wacko. No, this is something the Roth's been around for 2 decades. You know, it's not going anywhere. It's not going to, I mean, this is a system that's being used in most countries. Canada's got it. England's got it. You know, most of them have got this type of an opportunity for people to be able to retire in a tax-free environment. So, yeah, it's going to be around a while. And we might as well take full advantage of it, especially if we can pull, you know, and I say modestly 60%. But, yeah, I mean, if we can do that, why not? Why not? There, I parked long enough.
Yeah. So, and then you said currently right now there's no Tier 3. You're doing the...
Tier 3 is coming to a close at the end of this time. Now, when I say closing, I'm only closing it so we're not adding new members to it. The other part is it's already at 50 people, somewhere in that range. And I've learned that when you get a group that size, it's herding cats. And that's part of it. The other part of it is it's not oriented in the direction I want it to go. It's not oriented toward moving money into a Roth. True, it's an opportunity to be able to invest and have a quarterly in and out opportunity with it, but it's not going to give you the retirement, the tax-free retirement that's sitting here in your lap. It's kind of insane not to do that.
Okay, so that's why you're going to quarterly,
yep.
semi-annual
options. Yep, that's why.
Okay. Risk levels, is it staying the same? Is it 2, or you guys going to bump that up a little bit because the Tier 3's gone?
I'm sorry, say that again.
The risk level, is that the same? Is that risk level 2 still?
Risk level 2 is only for steady capture.
Oh, okay. So,
yeah.
So what are you doing on the new platform?
There is no risk level.
There is none. Okay.
No, it's just straight across, dollar for dollar.
Ah, okay.
I like it.
Okay. Yeah. And then one quick question about that taxes for converting. Is that like one-time payment fee right then and there? Got to pay it in full? Do we know about that?
That's paid for in your the year you convert. That'll be paid in those taxes. So if you were to convert in 2018, that would be paid April 15th, 2019.
Oh, so it goes into the tax year.
It's with your taxes. It's not to pay us or we pay the IRS. It's just with your taxes.
Oh, so I have to like do something on my taxes as far as I did this conversion.
Yep.
And then they'll...
Yes.
Okay.
Yes.
Yep. And they calculate the penalty.
You'll receive a 1099 from us, and you'll just give that to your tax professional.
Oh, I see. Okay. So it may not be as much as I would think if I have certain write-offs to help offset my taxes.
Yep.
It may not be as bad as something.
Yep.
Okay. And then the Warka, going back to Warka. Did I hear you correctly when you said that once there is value in the dinar, no matter what it is, once there's any kind of value, everybody's going to have to claim it. Once you start transferring money over, that is going to be a taxable event?
Yes. That's what I'm sharing. Okay? Warka is no different than you holding the dinar, putting it in your closet here. Okay?
Mm-hmm.
It'll grow in value sitting in the bank, sitting over there, but it doesn't change the dinar note count. Still exactly the same note count, okay? But when you make that transaction and pull it from that Warka account and put it into use here, that's no different than taking your dinar and cashing it into the local bank.
Okay. Okay. All right. And then do we know? I remember Tony one time saying that there was a 20,000 dinar limit. That was a while back. I don't know if they still have those limits. Do you know, Tony?
What was that again? Can you repeat that question?
The limits of how much a person can transfer from Warka over to the U.S.
$10,000 every 2 or 3 days.
Oh, every 2-3 days.
Yeah. No, it's not a limit to where you're handicapped. You know what I mean? It's just like every 2 or 3 days. You know, so what are they doing there? Instead of having one, where you're sending the currency and they charge you for that, and it's not like a percentage. It's like a $50 fee. You know what I mean? They try to get they try to get paid 6 or 7 times instead of once. That's why they do it. All banks do it.
Oh, I see. Okay. Because I thought you had said before that there was a 20,000 dinar exchange per month. I mean, I guess I must have heard that wrong.
I don't remember. I don't remember talking about that. But I know there's a limit like every 2 or 3 days on what you can do every 2 or 3 days or something like that. But I had to work a MasterCard. You know what I mean? So if I ever needed anything or whatever, just bought with my MasterCard or pulled out my daily limit from an ATM machine. You know what I mean? And got dollars back. But I never did that though. You could do that.
Oh yeah, I didn't know they had a MasterCard. That's kind of like you said. It's like an ATM withdrawing.
Imagine this. Look, they're not a Western bank. It's not a Western country. These guys coming up with an idea and starting a business does not exist in that part of the world. I'm not trying to be a smartass or be a jerk. It just simply does not. Everywhere else in the world, if you got a nicer car, you got a nicer boat, everybody hates you. The United States is like you see someone drive. Well, we'd like to think someone drives down the street. It's like, oh, that guy's doing good. Cool, that's what I want. The rest of the world's not like that. So they don't. A lot of these people that got opened on people, communicating with Warka, a lot of these people, sit there, it's like, well, let me see the email that you sent. And, there's like this 5 paragraphs of just a barrage of attacks. It's like, I can get better service at Walmart, and these people, not only do they hate you because you're from America, but especially if you're a woman. And that's exactly what was, so it's a completely different world. So, the thing about it is, how are you protected by it? You're protected up to $10,000 that's insured by the CBI. And then, there's a limit on what you can pull out each 2 or 3 days, but that's it. That's it. Not one person have ever talked to that started an account there that got their account shut off or anything like that. Right. And so, I had plenty of people that pulled money out. You know what I mean? Mm-hmm. So you'll be fine.
Whenever there is value, I could very well get the MasterCard and pull money out that way.
I'd try to get it now.
Yeah, just remember though that you have a taxable event when that occurs. Okay.
Yeah, exactly.
Right.
That's exactly it.
Yeah. Tax brackets and all that.
That's why I got mine. I still have it, but I've never used it. You know what I mean? I leave my currency in there, and let it collect interest. So I've been collecting. Sure. I haven't bought any dinar. I bought dinar from Chase Bank a couple, like 3 times. And when it looked like I was a drug dealer laundering money because there was so much dinar, I never thought about it. You know what I mean? They're rolling in carts, and people are like, "My God, I never had so many offers from women in my entire life." But I only had 2 events where I bought dinar, and the other is that when I put money in Warka, it's all off interest. And that's so I've been collecting dinar off of interest from Warka account. That's it. The rest of what I invested in Iraq had to do with the Iraq Stock Exchange, and that next event coming up is when the exchange gets on the NASDAQ.
Yeah, they haven't talked about that.
May I ask a question on the interest?
Yeah, sure. Go ahead.
And I apologize. I just realized I interrupted somebody. But the question on the interest is, when you're earning the interest in your Warka account, I am not to that $10,000 mark so that I have to claim it on my IRS. tax refund. However, my question is, since I am earning interest, do I claim that value that it has in U.S. currency on my income tax? Thank you for the answer, Bob.
Yes.
Wow. Okay. I need to do some backpedaling. So thank you.
Yep. All right. No problem.
You're not going to, just so you know, you're not going to get in trouble or anything like that. Just say, look, I didn't know. You'll be able to fix that. It's not enough where you're going to get in trouble.
Okay.
Good to
one
hear.
last thing. One last thing. I know you're like super, super busy, but any idea when that climate change audio is coming out?
Still working on it. It'll come out. It'll come out here.
Okay, I think I'm done. Thanks for all your answers. You guys are awesome. So.
Thanks, sir.
Hey, Tony, you had a window you were looking at, or that Rock was looking at. Their next window was around the summer or something like that. What's the new information?
The report that they have is that they're watching the cycles, and with the price of oil changing, and the report will be on, the CBI and all them, the Ministry of Planning, the Ministry of Finance, the CBI. That report will be on, and then they'll report it to the Parliament, and so people can make decisions, and then the Parliament will say, well, we want this, and then it'll go back up to the Ministry of Finance, then the Ministry of Planning, and then the CBI will manage it. So that's probably midsummer is when that report will come out for them.
Awesome, thank you.
Sure.
All right. Anybody else? Okay, very well. If not, then we're going to go ahead and call this thing complete. We are at 2 hours and 16 minutes at the moment. Thank you very much for participating, everybody. Thank you again, Tony, Megan, for being here. I realize that Megan presented a lot of information that you probably got to take a look at, but the other option, of course, is to call their offices and just ask, okay? They're more than willing to share and help you learn and educate yourself so that you can be able to put these things to work for you and make it happen, okay? All right, and on that note, Megan, one more time, thank you for being here. I know it's late for you in Florida, but I appreciate it very much. Tony, I know you and I will probably talk tomorrow every day, and we'll go from there.
Thank you for having me.
You betcha. All right, good night, folks. We'll talk to you later. Bye-bye.